In October 2021, the Pandora papers made quite some headlines when the International Consortium of Investigative Journalists released 11.9 million documents, totaling 2.9 gigabytes of data. Over 100 billionaires, famous people, and business titans were among the 35 international leaders whose offshore were made public by the leak. Similar news surfaced on the internet on April 3, 2016, with the name of Panama Papers, the scandal which involved a leak of 11.5 million confidential documents from Panamanian law firm Mossack Fonseca. So all these news must have raised some questions in your minds, like, what is this all about? What are tax havens and why do people hide their money in them? Is it legal or not? So let's talk about how governments in tax haven countries make money, and how do these tax havens create a win-win situation for both the company and the government. Tax havens are probably well known to businesses, public figures and celebrities, but many regular taxpayers may not exactly know what they are. So let me define the term tax havens first. Tax havens, also known as offshore financial centers, are a country or a jurisdiction that has minimal tax liabilities to foreign individuals and businesses. Stretching the concept of tax haven nations even further, any foreign site that has unique tax regulations to draw capital investment may be categorized or labeled as a tax haven. Additionally, they frequently support the so-called banking secrecy and provide a banking structure that makes the detection and investigation of assets difficult. To put it another way, people and businesses might try to hide their money in tax havens, whether it's in property bought, businesses created, or gathered through any other means, in order to save a lot of money that would otherwise be spent on taxes. These tax havens, also known as offshore financial centers, are frequently tiny, low-tax jurisdictions in far-off places such as the Caribbean islands. Wealthy people frequently keep money in various locations in the form of fictitious firms and unidentified entities. In fact, island countries like Malta, the British Virgin Islands, and Samoa make up the majority of the top tax havens. And let's have a look at these top tax havens in the world. Number 1 is the Cayman Islands. The Cayman Islands do not levy any direct taxes on citizens, including income, payroll, or property taxes, in addition to having no corporate tax, due to the Cayman Islands' 0% corporation and income tax rates, which apply to all investment-related income, including interest and dividends. They are particularly well-liked by hedge fund managers. Fortune 500 firms like Pepsi, Marriott, and Wells Fargo have subsidiaries there. Number 2 is Luxembourg. The world's richest country, Luxembourg offers advantages like tax incentives and withholding taxes that are 0%. Approximately 30% of US Fortune 500 companies have subsidiaries in Luxembourg. Number 3 is the Netherlands. Compared to other European nations, the Netherlands has a relatively low tax rate. Moreover, among the Fortune 500 companies, the Netherlands is the most preferred tax haven. Number 4 is Bermuda. With its perfect location halfway between Europe and the US, Bermuda has recently been a favorite tax haven for some of the richest people in the world. Corporate, capital gains, and inheritance taxes do not exist. Additionally, the sparkling turquoise waters and white sand beaches make it a popular destination for rich people looking to stash away money. Number 5 is Panama, the most notorious one. Panama's legal and tax structures make it a pure tax haven. In fact, it's the oldest and the best-known tax haven in the world. Income, corporation, capital gains, and estate taxes are not levied by Panama on offshore entities. And last one on the list is Switzerland. Apart from the delicious chocolate and remaining neutral in times of conflict, they also are best known for their thriving and reliable financial institutions. The country's tax rates remain quite favorable for individuals as well as businesses. Additionally, Switzerland's banking industry, which keeps the specifics of its customers, its financial accounts and operations in strict confidentiality, is renowned across the world. Apart from these, United States, including Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming are some other examples where no state income tax is required. In fact, UAE also offers special tax dispensation for investors. Now, you must be thinking about how governments in these tax-free regions earn money. Interestingly, the corporate tax havens of the world are also the biggest tax collectors of the world. Let's see how. Tax havens are desirable for businesses to establish themselves, in addition to being appealing to people. The majority of offshore financial hubs don't tax corporations, and having thousands of corporations registered under their authority continues to be advantageous to their governments. Tax havens may charge a fee for new registration of companies and renewal charges to be paid every year. In fact, in most regions, companies must also pay a renewal fee every year to maintain their status as a functioning corporation. In addition, there may be other charges such as license fees. Such fees and charges would add up to a recurring fixed income for the tax haven, as the sum of all these fees provide tax haven governments with a reliable source of recurrent income. One such example is of British Virgin Islands. It is projected that the British Virgin Islands government received over $200 million in corporate fees annually in 2016. In fact, by attracting foreign individuals or businesses, even if they are only charged a nominal tax rate, the country may earn substantially more in tax revenues than it would otherwise. Additionally, the country may also benefit from corporate investments in business operations that offer jobs to the country's residents. On the other hand, it's a win-win situation for businesses as well. The individuals or businesses benefit by saving tax, which in tax haven countries may range from 0 to low single digits compared to high taxes in their country of citizenship or domicile. For instance, Microsoft, IBM, Pfizer, ExxonMobil, Chevron, and Walmart are just a few of the 50 largest US corporations with an estimated $1.6 trillion in offshore accounts. These 50 companies made over $4.2 trillion in profits globally, but they reduced their effective overall tax rate just 25.9% by using offshore tax havens. Hence, these tax havens benefit both the government and the firm of the host country rather than just the governments. However, these tax havens occasionally find themselves in hot waters and are subject to controversies now and then. Since these regions are excellent for tax avoidance and evasion, there is tight connection between them and the crime of money laundering. The Panama Papers, Luxembourg leaks, and Pandora Papers have revealed the use of tax havens for often nefarious purposes. And since then, many have realized that the biggest safe havens aren't exactly what we thought they were. That is because these tax haven nations have exceptionally strict financial secrecy laws that successfully protect investors from investigations and punishment from their home countries. Given that the illicit origin of the assets is concealed or covered up, it establishes a casual link between tax havens and money laundering activities. Also, jurisdictions with less transparent business practices attract criminals to invest their dirty money. Tax havens are frequently used to transfer money earned by illegal activity, including drug trafficking, theft of public funds, extortion, bribery, human trafficking, and fraud. And so, the money launderers are given the legal protection in these regions with the help of these secrecy laws. Furthermore, it worsens socio-economic inequalities. If tax duties are not followed by everybody, it's an attack on the fundamental concepts of equality, tax fairness, democracy, and the rule of law. So, every nation in the world tries its best to attract potential investors into the country to promote its economic activities by enacting one or more beneficial policies. But precautions must be taken to prevent the nation from getting exposed to criminals or becoming a hub for illegal funds. Did we miss something? Tell us in the comment section below. And if you found this video informative and enjoy the content, make sure to subscribe to our channel and hit that like button as well. Thank you for watching.